Hey guys, welcome back to the weekly Watchlist where we go over all of our setups for the week as well as Monday morning, looking at the earnings for the week, the news as well, and overall what core companies we're going to be looking at this week for some overall most anticipated moves. Going to earnings this week, we really don't have anything significant. If you want to say Citi or PNC or something, by all means, but really nothing really relevant at all whatsoever to what we do. So another insignificant earnings week, nothing to make note of really for us. Going into Monday, we have only one news report at 2 p.m. for federal budget balance for intraday traders. At Tuesday, we do have at 6 a.m. NFIB Small Business Index, 8:30 a.m. Core PPI, and then PPI as well. 10 a.m. we have FOMC member Schmid speaks, and then we have RCP tip economic optimism, and then at 3:05 FMC member Williams speaks. Wednesday, do have a little bit of notable amount of news here as well. Wednesday at 8:30 a.m. we have core CPI, CPI MM, CPI YY, and then Empire State Manufacturing Index as well. 9:20 a.m. FOMC member Barkin speaks, and then member Kashkari speaks at 10 a.m. Crude oil inventories at 10:30 a.m. At 11 a.m. we have FOMC member Williams speaks, and then at 10:30 a.m. we have MPC member Taylor speaks. 12 p.m. FOMC member Goolsby speaks, and then 2 p.m. Beige Book. And that's going to be about all the news for Wednesday. Wednesday really kind of booked up, kind of just following its friend here is Thursday as well. At 8:30 a.m. we have core retail sales, MM. We have retail sales, MM. Unemployment claims, Philly Fed Manufacturing Index, and import prices, MM. At 10 a.m. we have business inventories, MM. NHAB Housing Market Index. Then at 11 a.m. we have FMC member Williams speaks, and that's going to be all the news for Thursday. And then Friday at 8:30 we have building permits, housing starts, and then 9:15 a.m. we have capacity utilization rate, industrial production, MM. Okay, so that's going to be all the news for this week. Overall, we have 4 primary watches this week. We're going to start with the markets, and then we're going to go into our watches, being Tesla, Nvidia, AMD, Microsoft. First off, with the markets this week, we're looking at a downside initial sentiment here based off my analysis here and evaluation of the price action development structured here. What I'm looking at here, downside levels wise for this week, nothing really crazy. Looking at 58.3750, 58.4596, and 58.55 downside crack all the way through, more than likely through 58.30, the psychological level for the market. It's going to be ES. I'm not looking at anything upside, so I'm not going to be covering anything upside, realistically speaking, for the markets, regards to the market specifically. We had this gap, we had fill previously here from a while back on the daily. You can see we had a pretty notable daily gap here, but we filled it, and now we're kind of retracing back and kind of engulfing that previous price action and following its sisterhood index of the ES here, the futures. The Nasdaq is coming with its sister here and looking some downside sentiment follow through as well. Okay, so we're looking at overall levels here this week, going to be 20,864. 20,800, 20,755, and those are really going to be my main levels right there. These are going to be a little bit far. I don't really believe we're going to see that, but if we did, 20,694.75 and 20,675 for the levels for the markets this week. Starting off with number one setup for the week for me personally is going to be upside and downside on Tesla. We do have a notable upside gap here that is going to be interesting, I think, if we approach and enter that zone for the week. Upside, I am considering 410 here. I am looking at the 410 level, but it's got to have the right divergence strength. I'm really going to be interested to see how we react here Monday morning. 405 is still in a congested area, and I'm more than likely going to skip this. I just don't really like this area, and I don't think it's going to even be coming this Monday. I honestly don't even think we're going to see upside too much, but you never know with Tesla, the volatility of it. It's really starting to structure up for a downside pennant break, a downside triangle break. So I'm really looking at really isolating at the 385 area, potentially a setup. And then 373 as well as a next core setup. 387 is a questionable area to take this. However, I will potentially consider it with the right correct weakness and divergence from the market. The divergent factor is going to be the most significant here for me. Looking at the momentum behind the divergence of this underlying to that of the actual markets in a given moment, especially near the open. I want to see the bodies being full and whole and not wicked around. I want to see really confirmative price action and not conflictive. Very particular criteria for taking this trade in order to become a profitable, maintain a profitable status on trade, and just not get stopped out from an invalid position due to poor price action analysis. That's going to be Tesla. So we got 410 upside, 385 downside, 307 downside. Those are going to be and 387 is potential downside. That's my first setup. but it's a very low quality in my book personally because of how it's structured up, market structure wise. Okay. Number 2 is going to be Nvidia, downside 134 level. Okay. I'm looking at this level because we are following. Yes, we are following the weakness of the market. However, I like the structure here. It's not got the most significant weakness or divergence weakness here, but we do have a pretty decent little bear flag structure development here, kind of starting to begin, just like Tesla a little bit, following the markets very similar with their own sort of bear flag developments. Level I'm looking at, like I said, is going to be 134 here. This is a pretty clean area, not too heavily congested, and it really does structure up right now with the right weakness on the longer time frame here. Over the last 3 days, we can kind of see this is just really starting to approach in a good way to showcase some nice weakness and a breakout here. Target's probably going to be like 133, given that kind of heavy notable rejection we had there off that 1 day's wick or the 1 day's body there. And also just the kind of previous price action you can see here, just the level of respect that level has. It's got a lot of support there. It's more than likely a pretty notable wall. So I'm not likely going to be holding past that or even to it. I'll probably sell right before the touch of it, or I'll have most sold and just have runners to the 133 and be out probably 50 cents of the break at 134. Entry is likely going to be at about 134, 20 cents, 15 cents ish, maybe even a little earlier, depending on the type of weakness we get, just to kind of preserve capital potentially on a loss. Maybe get in a little bit earlier in case we get a notable rejection, which, as we know, Nvidia loves to do this. Don't wait too long, and don't have too much of hesitation in that entry. We need to be very, very selective in where we take this position at. Okay, and be hyper aware of the kinds of rejections we've gotten with Nvidia and pullbacks and reversals and so forth, upside or downside irrelevant. We've gotten dollar reversal engulfments completely, even $2 ones in one candle. So not a company to mess around with, especially. It being the new Nvidia, obviously not old, that we lost 6 months ago, 5 months ago when it split. Next setup is going to be AMD. Again, this is pretty decent quality to me. However, just not going to be as crazy high as Nvidia or Tesla for myself. But I do like this at 114.50 cent area and going into the 114 break down to potentially even 113. But most of my position will be scaled at 114. Likely going to be in above 114.45. If this approaches with this kind of weakness, though, coming into Monday morning, it more than likely will have already broken the low and potentially down to 114, if not through it. But this is how I'm looking to take it as of right now. 114.50, selling at most of it at 114, and then scaling the final amount out at 113 just for a dollar break. Notable percentage, even on just a Monday. My final setup is actually going to be Microsoft here. This isn't the greatest quality company, obviously, with regards to what it is as an actual company. With what we do, with the breakout continuations and actual follow-throughs and lack of stop-outs. The stop-outs are pretty heavy if you were to take a lot of these trades. So I think I've only taken in like 2024 alone. I only took like 10 trades on this company. And it was a good win rate, but it's because it only presents like 10 good setups a year. Okay, so it doesn't present a whole lot of great setups. And that's something to be hyper aware of. This is definitely a lower quality stock for what it is. So the only time to take it is to take it at a time in which it presents one of those types of absurdly good setups you cannot skip. And so I'm looking to take this. I wouldn't say this is absurdly good. I would say this is definitely a justifiable risk trade for sure. It's definitely worth taking out, seeing cash in the correct approachment of it at the 415 level. And then my target's likely going to be around 414. This is a bit of a slower mover, but I mean, you can even just see here on Friday alone, crazy wick right there. 420 all the way down to 416. Okay, so that's a $4 move. You can see kind of a reoccurrence here of the same exact structure here, almost a $10 move really right there. We get these kind of time and time again, but you really got to catch them right on the right setups. And I would be willing to catch $1, if not maybe even all the way down to 410 with the right weakness and the right divergence of it and reading this tape correctly with level 2 and the incremental changes to that. But I'm likely going to be scaling out majority of my position through at the 415 break into 1450, and then probably a remainder, if not just a quarter left at 414. I do have the key level at 413.84 and 413.64, so I may be looking to consider scaling out the last amount of my position at 413.84 or the 413.64, depending on the kind of weakness we get on those 7 candles and the actual divergence that possesses in a given situation with the markets at that given moment. Okay, and that overall, guys, that's going to be the overall watch list this week. I do have 4 side watches. I'm just going to say them. I'm not going to cover them because I don't think they are something really to even be covering. However, I do have them charted just as a back, all the way in the back to just keep an eye out on and watch. MSTR at 300 downside, bit overused. That's why it's a side watch, like pretty heavy overused. Amazon 235, it's Amazon. And then, not 235, 216.50 Amazon. Apple 235 downside. Again, it's Apple. Apple and Amazon are very similar in my book to the quality of the companies they have, but it's a very similar structure to the market here. And again, that's another red flag. Is if it's such an identical structure to the market and it's not even that great of a setup, I'm really just disinterested in it because I could care less. And then on top of that, being Apple or Amazon, it's not something for me to even really seriously consider. And that's again why it's a side watch. If any of the other ones even come close with the right approach, I'll either take those or more than likely stay cash. Okay. So let's go into this week, guys. Have the right entries, tight entries. Listen to yourself. Confidence in your own systematic beliefs of how you trade. Isolate the setups you like. If they don't approach the way you need them to, in accordance to that of your criteria of your set system you've developed over time of trading and screen time and backtesting, skip it. Sometimes the best trade to take is the trade you didn't take. So stay cash on those. Okay. Remember how we do this. This is trading. This is not a 9 to 5. You get paid to manage risk and be very, very precise and decisive in your decisions. You have to be a very concise sniper in your shots. And this is what we have to do to become and maintain consistent, profitable traders. This is what I've done. I've been doing this now almost 2 years, and that's what allowed me to turn my initial $1,000 account into a 5-figure, going on multi-5-figure account. This is how you do it, okay? And that's what's going to put me eventually into the 6-figure range, and I'm sure the 7-figure in the 5-year area, you know? So focus up and do what I'm telling you guys to do, and be extremely disciplined, and you'll make it. And let's get this week done. Let's kill it. It's another week in the books. Let's make it a nice green one, and then move on to the next one. Let's have a great week, guys. Take it easy. Peace.